All right. Welcome back, everyone. Um, in this video, well, in this live session, I forgot I was live. I'm basically just gonna be going over my back system. You know, yeah, I ain't gonna really make this intro too long, but yeah. So, without further ado, let's get right into it. So, the very first thing, all right, is I just need to mark my price is bullish on my 4 hour time frame. So bullish breaker structure, right, swing low, swing high, easy. Like that was simple. All right, since price is bullish, mark my zone or area that's of liquidity. This area of liquidity came down even further, sweeping more liquidity, which means that this is a demand zone, this of liquidity. All right, cool. So that's a demand zone of liquidity. And this does it for my higher time frame. Go down to my medium time frame. My medium time frame, I literally, what do I see? Price is bearish. Right? How do I know? Because price is literally falling down. Price is bearish. Right here, price most likely putting up to the supply zone. So let me just mark where price is currently. So price is pulling up, but actually before I even do that, let me really look at price. Because price could be doing two things. All right. Honestly, if price does not break out of the zone, it is still bearish. All right. And why do I see it as still bearish? Because this is my last swing low or my last internal breaker structure slash liquidity. Yeah. All right. So in this box here, everything that is within that box is internal structure. So my external structure is bullish, my internal structure is bearish, but my second layer of internal structure is bullish. And I know that's pretty confusing, but yeah, it's bullish. Right. So it's most likely coming up to the supply zone. And is this just a regular supply zone? No. This is a supply zone that deal with this sort of liquidity. So the fact that this supply zone sub liquidity, it went up even higher, super more liquidity, the sub liquidity above here, and the sub liquidity above that as well. So these are all zones of sub liquidity. Now this zone specifically is the zone that I'm interested in. So I'll mark this as my pivot candle. And you may see me be a little bit too precise when it comes down to like marking the zones, but that is just how I do it. Like I may be a little bit too precise trying to mark literally every pixel on the screen, but honestly that's just how I do it. So all right, internal structure price is still bullish. Now, what I can do, I can trade this up and continue to reach the supply zone. But if I pull up my premium and discount tool, at the moment, price is in the premium area. So supply is going to be entering the market soon. I don't know when, but pretty soon. All right, price is in the premium area. So I should not be looking for buys, even though my second layer of internal structure is bullish, I should not be looking for buys. Honestly, I should just wait until price gets to this area. So that's all I'm doing. All right. Now if price starts to, so for example, right, if price, all right, I see that. Wait, let me see, what do I see? This is my last internal breaker structure. Actually, let me zoom in so you can see. All right, what do I see? This is my last internal breaker structure. About here, price went up, sweeping liquidity. So this is a liquidity sweep. So yeah, this is my last internal break. That means this was my swing low. Price broke that swing low, creating a market shift, right? And it came down and it did not break here. It actually just swept liquidity. So this market shift is not even valid yet because price hasn't broken. Price hasn't created a breaker structure to the downside. So honestly, I will continue to wait for price to do something, for price to tap into my point of interest. All right. First play. All right. It's getting up there. All right. All right, boom. As soon as price taps into my point of interest, guess what? I'm dropping down to my 5 minute time frame. And on my 5 minute time frame, I'll go all the way to the left and I look. If price goes deeper into the zone, where would it be going? And in this scenario, literally here, it would be going here. All right. So I zoom out and I stretch this all the way here. But also, I take note of this, right? When price comes into the zone, it may sweep liquidity. And honestly, I just might wait for another liquidity sweep. So, excuse me, I'll wait for another liquidity sweep and wait for price to give me my entry model, excuse me. I know my voice is deep and sometimes it may sound like I'm saying something, but in reality I'm saying something else. And that's something that I just realized that I had to do. Just talk a little bit louder. So, right in this area, what do I see? Price didn't tap into my 5 minute point of interest. It gave me bearish, yeah, it gave me a lot of bearish momentum. So what it did was price came up here, gave me an internal break structure, right? And zoom me even more. Right? Came up even higher, another internal break structure. Came up even higher and it swept liquidity. Right. And why am I looking at the small details? Because look at the video. I'm literally calling it what mastering sniper entry models. In order to be a sniper, you have to look at every small detail. Right. And not even just when trading, but like in order to like really execute anything, you have to look at all the small details. So all right, this is my pivot candle that led to the imbalance. The fractal market shift wasn't valid, really valid until this era. So I can see it. This is my pivot candle. So honestly, in my trade plan, what I would do is I would enter here and place my take profit down there somewhere. But I'm not going to do that here. Why? Because honestly, I really feel like price is not confirmed to me that it is bearish. Yeah, I have an imbalanced candle, right? But let's look to the left a little bit. This is a demand zone here. This is a very small demand zone. Let's see what happens is. Let's see if price run past it. And honestly, you already did. If I really look at price, now I gotta work on my speech. If I really look at price, price has really swept liquidity from this demand zone. And just to, get down to the small increments of what price is doing, let's go on a 1 minute time frame just to see something. Guess what? Price is still bearish. All right, price is bearish, not still bearish. Price is bearish. Cool. So this demand zone did not do its job, which is telling me that what price demand is kicked out of the market, right? And to really look at that, I can wait for this to be taken out, but this is just showing it to me. So it's most likely gonna. Okay, let me see. I may not be bearish yet. It's probably coming up to get more liquidity. Cool. Price is bearish, but I really just need price to tap into this box here. I need price to tap into this area. Um, so I really just wait for that. And I look at the candles as prices coming up. I need bullish momentum. All right, so look, I wouldn't even enter. Usually I would, but like, I wouldn't enter. I'll wait for a liquidity sweep, another one. I need price to give me a liquidity sweep above this area. All right, I guess a little bit too fast. Cool. It gave me the liquidity sweep. All right, boom. A sub liquidity, not just above the box itself, but a sub liquidity above there. Cool. So guess what? This is my pivot candle here. What did I just do? This is my pivot candle here. Oh no, actually, let me. Now this is my pivot candle. What I mean by that, this is the candle that led to the fractal market shift. This is the candle that led to the imbalance. So when price comes back up here, I enter. Boom. Before I enter, I go to my 1 minute time frame and I look for more liquidity. Where will price continue to go up? Guess what? It'll be here. Or let me see. So liquidity, fractal market shift, it'll be here. So if price continues to go up, it'll be up there. So guess what? I'm placing my stop loss just above there, just to be a little bit conservative. And honestly, I feel like price may come up there. Now, if price does come up there, then I can enter for another entry. But for right now, I'm gonna just enter right there. I'm gonna place my take profit right here. I wanted to. It's pretty decent. It's not really nothing crazy, but honestly, I know I could catch a better entry. So honestly, now if price doesn't respect this area, then it's fine. But I feel like it might. All right, it tapped into the area. I might get stopped out. All right, if it breaks below this area, I'm gonna head and take profit. If not, okay, I got stopped out. So again, I got stopped out. Um, I got stopped out. So I got stopped out, and I really don't know why. Most likely, prices coming out to this 5 minute point of interest, which honestly I should have been waiting on, but I think I was just being a little bit too impatient. So let's see something. All right, it comes up to there, and now we need a liquidity sweep from this 5 minute point interest. All right, liquidity sweep still doesn't respect it. Okay, cool. That's what I'm looking for. That's my sniper entry right there. I really feel like I just be second guessing myself. Go watch how price collapse. Now, if price doesn't collapse, then I'm just I don't know. I don't know what's been going on, bro. If price doesn't collapse, bro, I don't even know what to tell you. But I already just not even I feel the price is gonna collapse. I know the price is gonna collapse. Now I know like it's not even a thought in my mind. Trying to make sure my entry lines up with my this is should have been my original entry, honestly. But this I don't know. I just got I guess triggered right there. Oh watch this, bro. Now if price doesn't collapse, then okay, I'm just wrong today. Look at that. Look at that. Oh shit. I still got stopped though, but it's like, bro, it got down to at least like 1 to 5, 1 to 6. It got down to there. I don't know what's been going on, but okay. I'll take both of these losses. I'll mark them down in my books. Yesterday I didn't do it, but today I am going to do it. So both of these losses, I feel like I lost both of these because for one, impatience. Two, trying to hurry up and enter. So impatience. Um, yeah, because I mean, yeah, I'd say impatience. So this one I come to the app, mark my list stuff. Wait, yes. The first one was at 53,700. Oh man, I just need this. I don't know, bro. 53770. I don't know what's been going on, but recently I haven't really been winning. 53265. Now I know we don't suppose we're not gonna win all of them, right? I lost 700. See, that's a bad entry. Like, cause I used to be to where my entries. I really feel like this is something that I need to look into the zones, cause that's something that I just overlook every time I overlook it. My entries, what could have been better? Um, I should have. But as I was saying, um, I really feel like that I need to look more into like the I need to look more into the phases, not the phases of the market, the sessions, because honestly, I've been looking over them for the longest. Like I'll be like, okay, London session, whatever. He just like whatever. I'm not really looking into it. I'm just like, okay, this is a session, and I feel like that's what's causing me losses as well. Because honestly, I understand liquidity, I understand market structure, I understand all of those things, but I feel like the fact that I'm not looking at um the fact that I'm not looking at the sessions is causing me to lose. And this is a horrible entry, bro. It's it's okay. Like, so then I just don't trade for the rest of the day. I mean, but in this situation, like I'm just going to back test the rest of the day or whatever. So boom, 700 loss. Fuck. And I got another trade, silver. And if you don't already know what this little app is, it's just something that I'm really still trying to fix. 5 4 is a 5. Is not even good right now. 5 4 5. 3265. Wait, can you even see what I'm doing? Oh, you can't. I didn't even notice that. My bad. You can't even see what I'm doing. But yeah, like dang, I lost 1,000 in this one. All right, this one was New York. I can add in the screenshots. So screenshots. Gonna add in there quick. Well, the first one is going to be the same. Like just, I mean, this one like price is heading down, but it still didn't have enough liquidity. And I just gotta realize, like, I mean, I'm not gonna be right all the time, and I feel like that's something that I need to like realize that I keep trying to prove myself, like, yeah, I'm right, and it just causing me to lose. And I know this is back testing, but I feel like doing that, it just causing me to lose, bro. This one, excuse, yeah, I'm just gonna say the same thing. Why did I enter? It was an analysis. I thought price was bearish, turning bearish. Would have been better on my entry. Also, I need to understand liquidity and sessions. That's something that I need to look at, like liquidity and sessions. Like how does the London session affect liquidity or etc. So both of these trades I lost. like back to back. Both these trades I lost. Um, these is not good setups, but it's alright. It's alright. It's alright. So honestly, I'm thinking about going looking at another trade and just like really trying to spot what am I doing wrong. So I'm just gonna delete everything. Go back to my 4 hour time frame. And yeah, let's do it again. But this time I'm gonna go back even further. Let's see if I go to my 1 minute. Cool. As long as I go to my 1 minute, it's all good. So in this area, what I see, price is bullish. Right? It's about to create another bullish breaker structure. So honestly, I might just wait for that to be taken out. There we go. So this is my bullish breaker structure. This is my swing low. Swing high is not determined because price hasn't pulled back yet. Dang. If you give me 1 second, I'm literally about to run downstairs to turn off this air because my feet is freezing. So give me 1 second. I'll be right back. Hopefully my headphones don't fall on the ground. I also just grab some cookies. But anyways, so that's my swing low. All right, this is a demand zone. Let's triple quit again. So this was actually much better structure. Like the structure of price in this scenario is much more cleaner than the previous one. But this is also a demand zone of subliquidity. Um, the pivot candle is here. So yeah, these two areas most definitely A plus setup when price gets there, if price gets there. So now I basically wait for price to retrace a little bit. All right, boom. Price just retraced. So this is my 4 hour swing high, which means 4 hour week. So if I want to buy my premium and discount, right now price is still in the premium because it just created um that internal um the reversal. It just switched from bullish to bearish. Right. So the internal structure is now bearish. So this is zooming even more. This was my last internal breaker structure. This up here was a liquidity sweep. This up here was a liquidity sweep. So a pivot candle for that is about here. So honestly, I'm gonna mark it like this. And this really This really was my pivot candle. I mean the liquidity candle. So, all right, I'll wait for price to get up there. Now, like I said before, price doesn't always get to your desired point of interest. You can do whatever it wants. Hopefully the screen isn't lagging because it just started tripping on my end. Um, but yeah, so now I know that price is bearish. Why? Because not just because there's imbalance, but also because price broke this structural low or this swing low on my internal structure, causing that internal market shift. So the fact that there is an internal market shift, this makes my new swing low on my internal structure. And it's just the same thing, but this makes my swing high. This makes my swing high. Um, I really don't like the dots, like when I'm marking swing highs, swing lows. That's why I do it like that. So within this range, where is price currently? It's in a demand area, right? Currently, price is there. So prices are going to start to go up. So I could, scalp and try to look for an entry here again. Like that's too much because that means I'll be going against the internal structure. I'll be going against the structure of price. And even though the external structure is bullish, like I'm still going against the internal structure. Right. And so in this area, look what happened. If I would have entered for a buy, I probably would have got stopped out. So if price came down, sweeping more liquidity. All right. There's a lot of liquidity being swept, so price is most likely about to like run up there. Honestly, maybe I should look for a buy because price of liquidity even affect the market. So let me see. This would have been my pivot candle. This would have been a nice entry here. Let me see something. Let me go to like here. So price. So I can say that okay. Price of liquidity about here. Boom. All right. Except liquidity. That means this is the fractal market share. So that means that when price breaks over that line, it's going to tell me that price is bullish. All right. So boom. All right. Price goes down even further. That means now this is my fractal market share. All right. Price breaks over it, but not really. And guess what? Price goes down even further. So now this is my fractal market share. I'll wait for that to be broken above. Cool. It got broken above. And I'm on my 15 minute and I didn't realize it. I'm supposed to be on my 5 minute doing this. Um, so since I'm on my 15 minute looking at this, on my 5 minute is most likely happened already. To where yeah, it tapped into it. Yeah, that's I already see my entry. It would have been here. I would have tapped and I would enter right there. Stop loss just below here. If there's no liquidity on my 5 minute, there's no liquidity on my 1 minute. Right? Because higher time frames always hold more structure and more power. No, I'm not saying that it's not gonna come down there. What I'm saying is it's not gonna be as stronger to come down there. So in this scenario, I might just stay at my 5 minute. Um Now I can target literally these swing highs. Like look at this. It's literally equal highs right there. So definitely price is gonna go down, sweep that liquidity. It may even go even higher because of all of this. So honestly I can target just about here. A smooth 1 to 3. Um, and if I just look at the wicks of price, if I just look at the wicks, what do I see? Oops, what do I see? I see price came all the way down here, but demand pushed it up. Price came all the way down here, demand pushed it up. So demand is definitely stepping into this market. If not, it stepped into it already. Look at the next candle. Boom. It's bullish. So I'm gonna enter very aggressively here. Very aggressively and take it all the way up. No, and this is probably not a good entry, but let's see. All right, it looks like it's getting up there. Okay, starting to come down. The man is running short because there's a supply zone. I don't even think I hit TP yet. Oh, all right, but it's damn sure close. All right, so it TP. Honestly, this trade was like, it's pretty decent, but it wasn't the best. This is a 109. Like, it wasn't the best. I could have even got even. Why my feet so cold, bro? Like, my feet are literally cold as. Anyways, I hit a 109 with the reward in this trade. Now, I know I did a lot of talking to myself, kind of. So let's rerun this and let's go back and let me show you what I did one more time. 4 hour time frame was bullish. Cool. I marked my demands on a sub liquidity, another demands on a sub liquidity. I marked my premium and discount tool, showing me that price I should be looking for selling opportunities. Go to my medium time frame. I literally do the same exact thing. I mark where price is, I mark the trend of price, and this scenario price is bearish. I mark my premium and discount tool. I mark my supply zone, the sub liquidity. Cool. I zoomed in to price even more. I seen that price was. I seen that there was a lot of wicks right here. So wicks equals liquidity in my scenario, right? So the fact that there's all of these wicks, I say, okay, this wick is telling me that this candle, this body of this candle, it came way down here. Literally, it came way down here, and buyers pushed it back up. The man, like right here, this candle came way down here. Buyers pushed it back up, and it closed right there. Buyers pushed it back up, and it closed right there. So that told me that okay, price is not going to come back down. All of the liquidity has been swept, right? And so that's when I was on my five. I went to my 5 minute time frame, right? Because that's where I was supposed to look for the entry. I looked for it on my 15 minute without really realizing it, but I was supposed to be on my 5 minute time frame. But the price. So basically, this is my 15 minute time frame, right? This right here is my 5 minute time frame. So honestly, yeah, I would have entered the same pace. So honestly, all right. So if I even analyze it on 5 minute time frame, I see that price came way down here, sweeping liquidity. It broke above the candle of liquidity here. That means guess what? My pivot candle is literally where I entered it. It's here. I should enter. Yeah, it's there. Or that's where I entered it. And the reason that I didn't place my stop loss way around here or way down here is because there's no all of the liquidity is swept. There's not one piece of liquidity there. And I didn't really worry about my 1 minute because like I said, if my 5 minute time frame is not showing liquidity, price is not going to respect my 1 minute. Like my 1 minute is very, very, very deceiving. And you should know that as a trader. 1 minute is deceiving. And you see how price was it ran the TP. I mean it started to consolidate here, but it still hit TP, right? Just by liquidity. Now, like I said in a few minutes ago, I need to look at the sessions. So let me see when was the trade executed. I entered the trade in the overlap. Oh no, not the over. I entered the trade in New York session. Wait, was it New York session? Yeah. I literally entered the trade in the middle of the overlap. I mean, at the end of the overlap. So just at the end of the overlap, I entered the trade, and the trade finished in Asia session. So this was just a simple day trade. About here. to about here, about 10 hours, making how much? $5,650. And I say that because um every time I backtest, I identify as a 50K funded account. Right. And so in 50K funded accounts, if I'm using Top Step, my drawdown cannot hit $2,000. Guess what? Let me see how much this was. Oh, this might have been close to 2,000. Oops. Let me see how much this was. This was about what 6 pips. So 6 times 50. Let's see. So this was $300. I was $300 in drawdown. But my whole entire stop loss is, let me see, 550. So I would have been $50 over. So they probably would have took me out the trade. So honestly, like if I was on like a funded account, and if I set my risk to 500 limit, like if I set my risk to like once you get over 500, take me out the trade, I would have never won this trade because it would took me out because I hit $550, but I still hit the trade on this one. So in reality, I would have lost this trade. I would never even won this trade, but here I won it. But yeah, so I won. Like I said, um, I won. Let me make sure that's the accurate number. Let me see. Yeah, 5,560. I mean 5,650. The way I got that is I take this number here and I calculate it by the tick value. And in this scenario, since I'm on silver, I'm using 50 contract, 50 ticks. How do I say that? 50 every tick is $50, bro. I can't even think right now. Every tick is $50. So the 50 times this number, there goes my take profit, which is actually this number. It's at a zero. I do 50 times this number, which equals my stop loss, right? And which is this number with an extra zero. So yeah, so I can actually go and document this one as well. So let's go here. Let's go here. Let's document this. Enter for a buy. My entry price was 43060. My stop loss was 43005. My take profit was 43625. All right, like I said, 2 contracts, 1% on this. Did I follow trade plan? Yes. My setup clear? Yes. I entered or finished on an overlap. All right, and let's take the screenshots. Now this is a better trade, honestly. If the audio is too loud or my mic is too, what I'm saying, excuse me, apologize, but just bear with me. Take a screenshot of this. Um, yeah, so I really feel like I want to trade because of liquidity. Like honestly, because of liquidity. And I was starting to think, was this a lucky trade? Like, did I win this because of luck? Like, honestly, does this, did I win this because of luck? Oh, what is this for? I'm just gonna leave it there. I'm not even gonna miss anything. Higher time frame. Man, my feet are still cold, bro. It's all good. I just want to 1 to 10 or it's 1 to 10, bro. I won $5,000 in a matter of 10 hours. Why did you enter liquidity? I'm gonna say liquidity concepts. What could have been better? Um, What could have been better, honestly? I should look into the sessions more. Or cool, cool. Oh, I keep forgetting to share this because I'm not sharing my whole window. I keep forgetting to share this, but yeah, this is what I did, and so now even though I'm 5,000, it takes away from the other two trees that I lost, and like I said, I need to fix this app because of that, but it's gonna get fixed pretty soon. But yeah, so I won this trade, pretty good entry, whatever. But yeah, so I mean, I caught a 1 to 10 is the reward. It's pretty good entry. My one percentage went down because yesterday was horrible, bro. I literally deleted two of them because I forgot to take screenshots. So I had three losses yesterday. Really, one, two, three, four losses yesterday and one win. Now my 1% is down to 75. Like, bro, and now my 1% is down to 75. Like, guys. But let me show you this real quick. This is also my entry model. Where is the screenshot here? There it is. All right, this is my entry model. Um, the same thing that I just did, honestly. You know, my high time frame structure is on some liquidity. I'm creating narrative of price. Wait for my 15-minute mitigation. I'll drop to my 1 minute. It really should be 1 minute slash the 5 minute, but I'm just gonna put 5 minutes. Because it really just depends on the market conditions. Depends on like, when should I drop down to the 5 minute, if I should drop down to the 1 minute. Like yeah. And it's crazy, like bro, I have a 1 to 30 max risk to reward. I imagine that. Anyway, yeah. So this is a pretty decent entry. I mean, I have other entry lines, but honestly, I've just been using this one for the past few weeks, past few days. It was this one. This is the one that I usually do, but I kind of combine this one with this one. Like it's really a combination. So it's not even much a difference. It's more of just of a combination of like my 1 minute. Cause now in this one, I just involve my 1 minute time frame. Even though I just put 5 minutes, in this one, I wait for my 1 minute time frame. So honestly, I could delete this one for real. And I can delete this one. I'll keep that one just, but yeah. So I just wanted to, go over that. I got so much stuff to fix in this app. But I do thank you for, if anybody's even in the stream. I don't even think anybody is. Let me go see actually. Let me see. Nope, nobody's here. It's all cool. I'm not even, what I'm saying. I'm usually just like starting the stream and stuff, bro. But yeah. So I see y'all most likely tonight because I think I'm gonna stream again tonight because my family is going to a pool party. It's like an hour away. And I was like, yeah, I could go. But then I look at my trading and my trading sucks. My trading suck like shit right now. Like, bro, I had 5 losses yesterday. I ain't never had that many losses in one day, like back testing. So I said, I'm not about to go to no pool. I gotta work on my entry, bro. I gotta work on refining my entry. So that's what I'm doing. I'm just about to refine my entry more and more and more and more. And eventually my recording quality is gonna get better. My streaming software is gonna get well, hardware is gonna get better. All of this is gonna get better. Like it just takes time, money, stuff like that. But thank you for watching this and I'll see y'all tonight. I'll see y'all tonight.